As an alternative to physical gold and silver, coins and bullion, you might be considering investing in gold and silver mining stocks. Even though investing in mining stocks can be profitable if you do your research, it on the other hand can be very risky if you don't do your due diligence. Individual mining stocks that are related to gold and silver prices can provide exposure to strong mining companies, but it is much riskier than owning gold and silver coins or bullion. Wherever there is negative news surrounding a company's business or business partners, it can have an impact on the company. In the event that management makes a bad decision that causes a company to miss its earning expectations, you can find yourself sitting on an outside loss. A mining company, one with mines especially in Venezuela or South Africa, is also exposed to geopolitical risk. As a result of those risks, we would like to discuss the advantages of investing in gold and silver coins and bullion. Investing in gold and silver mining stocks as well as other alternative precious metal investments can come with potential risk. Investing in gold and silver coins and bullion. Those looking to hedge against inflation might consider owning physical coins and metals as a direct exposure to gold and silver. The advantage of owning physical precious metals is that they are tangible. Home safes, bank vaults, and precious metals depository facilities are common storage options. Direct access to coins and bullion gives you the peace of mind that you can physically hold your investment without worrying about your online brokerage handling it. In this day and age, with all the economic and financial turmoil, we advise that you take physical delivery of your precious metals. Owning precious metals in the form of coins and bullions that you can touch is the safest way to do so. Gold bullion coins and silver bullion coins produced by the United States Mint and the Royal Canadian Mint are some of the most popular options. Four of the most popular gold coins are the American Gold Eagle, Canadian Gold Maple Leaf, American Gold Buffalo, and South African Krugerrand. For silver, the most popular are the American Silver Eagle, Canadian Silver Maple Leaf. Platinum and palladium eagle coins produced by the United States Mint are also becoming popular investments. Compared to owning a stock in a mining company, the price of your physical gold and silver holdings will not fluctuate as much with this investment. In contrast, you can expect a less volatile investment that has historically outperformed many other types of investments. Now, the volatility of gold and silver stocks, on the other hand, is a lot greater. While this can be great when the stock goes up, it can also be very stressful when it goes down. Stocks like Barrick, Newmont are heavily dependent on the performance of physical metals. Stock prices of these companies match the price of gold at around 64%, which is considered moderate. The reason for this difference is that they are all individual companies with their own balance sheets, management teams, and operational strategies. There is no way to know with 100% certainty that a company will make profitable decisions because they vary from company to company. It is possible for the stock price to fall if there is a misstep. When you own physical gold and silver coins and bullion, you don't have to worry about this. When it comes to physical gold and silver supply and demand and monetary policy are the primary drivers. Investing in gold and silver ETFs. We would not be doing the viewers any favors not mentioning a third investment option. Silver and gold ETFs are another alternative. Investing in these products will be the most similar investment option to buying physical gold and silver coins and bullion. The price of an ETF is directly linked to that of gold and silver. You can find live spot prices on third-party sites such as Kitco.com. There are two gold and silver ETFs that are the most popular, GLD and SLV. Getting exposure to the precious metal market is affordable with both options. There are, of course, however, some major drawbacks to investing in these products. First of all, you do not have actual possession of the gold and silver. When you invest in a gold or silver ETF, you are buying into the underlying price of the precious metals, not the actual asset itself. Rather than receiving physical metals when you liquidate your position, you instead get the cash equivalent. There is, of course, a counterparty risk associated with highly levered ETFs. There are no risks associated with obtaining gold or silver coins, the physical. If investors lose faith in these paper metal products, your investments could plunge in value far beyond the metal value of the coins and bullion. Let's recap. When it comes to protecting your portfolio, gold and silver coins and bullion can be a great investment. In times of market volatility, gold and silver tend to perform well because they are safe haven assets. In addition, they serve as a store of value against central bank monetary policy, especially now when many central banks pursue loose monetary policies. This is of particular importance. It is these policies that cause inflation. It is tempting to diversify by investing in gold and silver mining stocks, but it is important to be aware of the risk. While they can boost your metal exposure, they can also increase volatility and losses. Investments in precious metal stocks will be determined by your goals and risk tolerance. Therefore, it may not necessarily be a bad way to gain exposure to precious metals. Be sure, however, to understand what you're getting into before you get it started. While ETFs offer a more attractive one-to-one relationship to gold and silver prices, they also have their disadvantages. There are a number of downsides associated with not being a tangible asset, including counterparty risk and leverage. If you are interested in investing in coins and precious metals, now is the time to do so. You can protect your portfolio by investing in gold and silver while the Federal Reserve prints unlimited money.